Good afternoon, ladies and gentlemen. Yeah, very tough job for me now to intervene after so many comments. I prefer usually to deliver keynote speeches at the beginning, so then I can sit down and listen. But I hope I won't disappoint you by presenting what I have prepared, because of course I'm trying to give some answers to some of the questions which have been raised by the audience and by the panelists, but of course not all of them. First of all, let me thank the presidency, thank all the organizers of this beautiful event. It's becoming a very nice practice to attend conferences of the presidencies on corporate governance, not only because this gives me the opportunity to travel around, and in particular this time to come to Vilnius, where it is my first time, so I'm very happy to be here, but also because we can dig a little bit into various issues, and particular specific issues which are at the heart of the general subject that we are dealing with, and which is one of the most important part of my, let's say, portfolio, if I can say so. I'm particularly happy to see that this time the presidency has chosen a very crucial issue, which is the shareholders. The angle is not simply corporate governance and what is the Commission going to do with it, but I thought it was good for me to focus on the aspect of shareholders, their role, as investors in particular, their responsibility, the importance of their engagement, and what we are going to do precisely in order to promote their engagement. We are not going to introduce obligations for the shareholders like it was mentioned by Carmine, but we will really try to create as many tools as we can in order to make sure that the shareholder is more interested in the life of the company and becomes more committed to it. Now, let me give you, first of all, a brief introduction on the context in which we are going to intervene in the specific area of corporate governance, and which is the context of long-term financing in general. Because as you know, or if you don't know it, I tell you, this is really a top priority for Commissioner Barnier in particular. You know that he has published a green paper recently. They had stimulated a debate on how to foster long-term investment. And we are now really in the process of collecting the results of this green paper, and we are analyzing the contributions and the input that we have received, which was very important in terms of sides, in order to try to draw conclusions. Why we think that the long-term financing in general is an issue and an important one. Because as it was said before, the financial crisis has basically shown that, that there was a lack, an absence of some shareholders, which in turn has created the problems that we have seen, and which were which became so serious, in particular in the area of in the financial markets in general, in the area of the financial services. So this triggered the need for the European legislator to basically change the face of the financial services regulation, European regulation, and also change the face of the European supervisory mechanism. So these new rules were aimed primarily and mainly at reinforcing the stability and the resilience of the system, but of course we will see what they will bring. We will need some time. Ironically, of course, some of these rules have also reinforced the role and the stability, and will contribute to do so, of some of the intermediaries which probably have been in some cases, which had in some cases some kind of reckless behavior, let's put it like this, which has contributed to the crisis. So this could be looked at as a sort of paradox, but whether this has been wise or not, we will see in the end. What we know for sure is that the crisis had a lot to do with culture and with, in some cases, irresponsible behavior. Have we managed to introduce more responsibility in the system, in the financial system in particular? Have we managed to change the approach? Have we managed to start to promote economic value creation for the benefits of our society as opposed to the obsession with the quarterly profit maximization in the interests of a group of few people? We don't know. We had many good intentions. We will see. We are still in the process of designing the last pieces of the puzzle, and we will see what it will give in a few years. But we have identified this injection of responsibility into the system as an important objective. That is why, and we will come to that specifically, corporate governance and shareholder engagement is very important for us. But still, in general terms, we believe that generally, that if the underlying incentives of the constituency of the company, be it in the financial sector or not, are essentially short-term, the shareholder will not focus on creating long-term economic value for the benefit of the society, as I said, but rather the situation will be a little bit different. That's where we thought that there was room for intervention, a call on the Commission to intervene and try to rebalance a little bit the situation that we know is the one that I am trying to describe. We will try, with some measures which are still to come, we will try to realign the incentives in the system to make them push towards long-term value creation. We are in the middle of the process, as I said. We are in the middle of the legislative process changing the face of the financial services world, and we are in the middle of the process of drawing conclusion of the green paper that we launched a few months ago. What we heard, what everyone seems to agree on, is that the way out of the recession and towards more sustainable economy, more sustainable growth, needs to be investment-driven. That is what everyone seems to agree. Because investment leads to innovation that improves the competitiveness and also, and in turn, I mean, creates this positive and virtual circle, which in the end creates jobs and growth, as we all are trying to do since ages without succeeding in many cases. Now, of course, in order to fund long-term investments, we have to facilitate the access to the long-term financing. And of course, the capacity of the economy to make such long-term financing available depends a lot on the ability of the financial system to channel the savings of governments, households, all the savings which are available on the market in an efficient manner and towards the right use and towards the right users. This can be carried out in the usual way through the intermediaries, banks, pension funds, insurance, etc., but also by direct access to capital markets. And getting the long-term financing process right is for us quite central to supporting structural economic reform and returning to economic growth. So the question for us is whether we will be able, in the medium term, to sort of abandon our traditional, historical, heavy dependence on bank intermediation, and whether we will be able to move also to a more diversified system of financing with significantly higher shares of direct capital market financing, which is, of course, the situation is well known of the United States, for example. We will see whether we will succeed in this rebalancing, which for us would be and could be particularly helpful. The question is relevant. For us, it is very relevant because we've seen concerns in the investment chain, as described before, the traditional investment chain that we have in Europe, in its capacity to correctly channel funds in the way that I described before. So we've seen a number of malfunctioning. First of all, as I said, this explosion in intermediation, which we have experienced in the last decade, makes that the typical scheme is the one where the investor is the institutional investor, as I said, the pension fund, the insurance, the bank, and increasingly delegates the operation to the asset managers. The complexity and the length of the investment chain often create, as we said, a misalignment of interests. The delegation from asset owners to asset managers creates a clear sort of principal-agent relationship, principal-agent problem, which is sometimes exacerbated by the short-term, the quarterly performance evaluation of the asset manager. So on the one end, we have the interest of the institutional investor, of the owner, who would be, in theory, should be interested in the long-term absolute performance. On the other hand, we have the interest of the asset manager, which sometimes corresponds to the quarterly performance targets that he has to meet, especially in the typical scheme of the relative performance evaluation, which of course is the basis on which he will be evaluated. So there's probably something which needs to be adjusted, which needs to be addressed. What we hear, what we were told also by stakeholders, by you, when collecting opinions in the green paper, is that this growth, the expansion of the intermediation has increased costs for the investors. It has created the potential for misaligned interests, not always, but sometimes, and a tendency, general tendency to look at markets through the eyes of the intermediaries rather than through the eyes of the investor in the company and the one who is interested in the long-term life of the companies. I could continue. There are many reasons why one could talk, but I will summarize. When it comes to high costs of the capital, there are many reasons, and we know that we are not naive. We know that there are many reasons. However, definitely one of the main reasons seems to be also the erosion of trust in how capital markets function, including volatility and risk aversion. Furthermore, the rising cost of intermediation, which decreases the ultimate return to final beneficiaries and thus widens the gap between the cost of capital for the company on one end and the return to savers on the other hand, also seems to play a role, or seems to be a problem, if we may say so. In other words, we were told that there are dysfunctionalities which are generated or increased by the explosion of intermediation, which is worth it to look at. And this misalignment of incentives, in particular, the costs of intermediation as well. So there are a number of issues that we intend to address in our future initiatives stemming from the Green Paper on long-term financing. It is very, very early to say what we are going to do in particular in this area, and I cannot prejudge the technical work which is being carried out by my colleagues in this area, Of course, I cannot even prejudge the political dimension of the program that the Commission, my Commissioner, and the Commission itself would like to propose. So I cannot tell you concretely what we're going to do about that. But I mean, as I said, binding measures to favor the alignment and to reduce the misalignment, probably, it is an option. One of the other areas that I would like to raise with you, which concerns an issue that is certainly very well known to you, is let's say the idea of encouraging also asset owners to think in a more sustainable manner. You know, and I'm sure that some of you are very familiar with the proposal that we've discussed already in the past together with some of you on non-financial reporting, whereby we propose that companies will have to disclose, to give information about the policies that they carry out in the area of environment, social diversity of the board, the respect of human rights, and so on and so forth. I'm sure you know about it. This addresses, in particular, the companies. Now what we hear is that there is a certain request in order to make sure that also investors take into account the same issues and the same concerns when designing their investment decisions. What we're going to do with this, we will see, as I said. But the debate is open on that as well. Now, after this long introduction, which was in any event, in my view, necessary to put our little action in the area of corporate governance in the right context, a context which is very relevant, if I understand correctly, the issues which have been debated up until now. Let me focus again now a little bit on the corporate governance and shareholder engagement in particular area, where we also found, but this happened already a while ago, some weaknesses. What we are doing now in this area is the outcome, for those who do not know it, of a long process which involved various hundreds of stakeholders who have contributed to consultations, meetings, etc., etc. So we're now really towards the end of the process, and we are about to produce the tangible result of this long process. And in particular, in the area of shareholder engagement, what we will do is we will propose modifications, amendments to the Shareholders' Rights Directive. Why? Because, as I said, we found weaknesses also, in particular, in the area of corporate governance and shareholder engagement. What are the weaknesses? Some figures. The average holding period of equity on EU stock exchanges is 8 months. The frequency of portfolio turnover of 900 institutional actively managed long-term investment portfolios, the average turnover is 72%, so not far away from 100%. 100% meaning a full turnover of the entire portfolio within 1 year. Less than 10% of long-term strategies having a 3-year investment horizon on average. The others, of course, having an horizon which is even lower. So this means that the culture of long-term is still far away. We were told, again, and we believe that such a short-term attitude basically has risks or has probably already outcrowded the patient capital, and the public equity market basically has encouraged exit. So I encouraged exit over voice, we used to say. So basically has encouraged the sale of the shares instead of the engagement in a constructive dialogue with a view to influence business decisions of the company. So some would say the concerned investor has been replaced by the anonymous trader. Now, let me give you the usual disclaimer. We are not saying that short-termism is illegal or illegitimate or not needed. It is needed, legal, legitimate, and welcome. However, there is an issue on the other side. We also need long-termism. We also need a long-term attitude. And since we are so far away in terms of critical mass, we as Commission believe that we should propose tools to promote long-termism, since short-termism does not need to be promoted. It's very well promoted by itself. The reasons, probably, I could give you even more reasons, even more results of studies that demonstrate that shareholder engagement does not only bring out performance and create value for the shareholders, but contributes also to significant improvement of the governance, operating performance, profitability, and efficiency of the investee companies. So there are numbers of objective indicators which are at the basis of our upcoming action in this area. So what are we going to do? As I said, we're going to change the Shareholders' Rights Directive. Of course, we are going to start as well by the most juicy right to be given to the shareholders, the famous say on pay. It has been discussed already in several forms. Already exists in some member states. We will see, as usual, where to put the bar. Definitely, we would like to make sure that there is more transparency on the remuneration packages, on the remuneration policies to begin with, but also on the remuneration packages. And we want to make sure that shareholders has something to say about them. Will it be a binding vote or not? This is still a policy decision to be taken by the college, and we don't even, not to mention, of course, the legislator, who will be the one in the end adopting the legislation. So we just propose the legislation, so we have a very limited role and power in all that. So, but this is just the beginning. Now we're going to give the say on pay to the shareholders, but we are also trying, as I said, to envisage provisions which will basically ensure that investment mandates better support longer-term relationships and shareholder engagement. Operationally, we will propose, these are all proposals, which will come, to require institutional investors and asset managers to be more transparent, inducing a deeper reflection from their side on some key issues. They will need to publish their voting and engagement policies and describe how they discharged those policies, voting records, etc. This will also certainly facilitate the dialogue with the company itself. In particular, asset owners will have to publish to which extent their investment strategies are in line with the best long-term interests of their beneficiaries, and how they incentivize their asset managers in asset management mandates to act in the best interest of their financial beneficiaries and to engage with the investee company. They will be required to publish information regarding issues such as shareholder engagement, voting policies and records, performance evaluation of asset managers used, expected and actual levels of portfolio turnover, stock lending, etc. At the same time, and on the other hand, asset managers will be required to disclose to which extent their investment strategies are in line with the investment horizons of the asset owners, and to disclose information on engagement and voting policy and records, portfolio concentration, portfolio turnover, actual and estimated cost of portfolio turnover, and whether the level of portfolio turnover is in line with the agreed investment strategies. As you see, all principle-based, so no binding provisions, and mainly transparency. This is the key principle on the basis of which the Commission proposes to the legislator to adopt the EU framework: transparency, information. We believe that the flow of information will really help in this area and will really produce benefits. We do not go for, again, like in the non-financial reporting proposal, which I alluded to a few minutes ago, we do not propose binding measures, targets, benchmark. We propose to increase transparency and to, through transparency, try to create the tools and the stimulus for the interest of the investors. So transparency measures, we believe that this will basically, as we said, make sure that the investors will be more inclined to follow and to be committed to the life of the company. On the other hand, we also plan to propose that asset managers should disclose how they execute investment mandates, so with regard to the issues mentioned before, and there is also transparency about the level and cost of the portfolio turnover. So we will see. We will see when this will happen to begin with, because we would like these amendments to be well targeted and well calibrated. So the timetable has been slightly modified. We intended to issue a proposal basically in the coming days or weeks, but for technical reasons, and precisely because we continue to listen to you and we continue to make sure that we get it right, we have postponed a little bit the adoption target date for that proposal. Just a final word, because of course this is another caveat and of course the comments that I've heard here and there makes for me necessary to say two things before the questions, because I know what would be the question. First of all, the Commission is not the legislator, so I'm not representing here the legislator. The legislator, for those who tend to forget sometimes, is the Parliament, which is the expression of the democracy by definition, the Parliament that you vote, and on the other hand, the Council, which is also indirectly the expression of the democracy because it's represented by representative of your government. The Commission does nothing else than some little technical work that offers to them to see whether they want to vote or not on a legislative text. First. Second point, and less seriously, no, another point, it's important. We know that we are working in an area which is very sensitive because there is culture, there is tradition. We know that company law in general, but even more corporate governance, is an area where the tradition, the culture, the legal tradition of the member states needs to be taken into account. And we try to do our best in every single aspect, in every single proposal that we put in front of the legislator. We always try to make sure that we strike the right balance between what needs to be addressed at European level and what needs to remain regulated not only at national level, but at the level of self-regulation. So we envisage three layers: the layer of self-regulation, the layer of national regulation, which we do not interfere with, and we add, or we try to add, the EU level only to the extent that we believe it is necessary. And when we take this decision, as I said, we do it in a way together with you, or together with, as I said, the hundreds and hundreds of stakeholders who proactively contribute to the designing of our policies. Thank you very much for your attention.
Thank you very much. In fact, it's already 5:15, but probably it would be nice to ask one or two questions, because that was more from your side a bit of a provocative, that I would accept a couple of them, so please.
But I already have the answer.
Yep, at the end.
Hello, I'm Cordula Held from Deutsches Aktieninstitut. I have a question because you said that the asset managers and whoever wants to gain the most profit out of their engagements. But I think there's another thing that is important, especially if it comes to insurance companies. I think the turnovers we see is due to risk management, active risk management. And I think this is a thing that the Commission as well really wants to see from those companies. So maybe if you're really too much engaged into, you said there's no regulation, of course I understand, but into transparency and having these companies having to explain why they do that. On the other hand, you have this real strong implication of risk management, also due to the financial crisis. Don't you think you create a conflict of interest, or a conflict that these companies are not able to solve?
This is a very important point, and it's a good question, because it allows me precisely to illustrate where this famous balance I was talking about should be reached. In particular, in the non-financial reporting proposal I was referring to, there is a chapter on risk management. There is information on risk management policies that companies have to disclose. There, precisely, we have made our best effort to make sure that the risk, the information and the transparency, in particular related to the risk management policies, does not become counterproductive, does not go further than what is exactly needed, and so as to create the risks, sorry for the word again, that you are mentioning too. But again, this is the exercise that we have tried to do, and we try to do all the time. And now, jokes apart, the process, when we put a proposal on the table, we are always willing and happy to improve it from the technical perspective if needed, and it happens all the time. And of course, we are always also subject to the wise decisions, political decision of the legislator. So we will see where we will end up. But we, from a technical perspective, we had this problem clear in our mind, and the answer that we have given, which I'm not going to spell you in detail because I don't even know them, but is an attempt to address precisely this issue of the balance.
The last one?
Lady.
Okay. Leena Linnanmaa, Finland Chamber of Commerce. We have understood previously that you're going to address the monitoring systems of corporate governance framework. Considering that the monitoring systems differ to a great extent in the different member states, I think we would like to hear how you're going to address the issue, if you are going to address it, and how will you take into account the differences in the monitoring systems? Thank you.
I frankly thought that this was an issue solved, because I personally say publicly all the time that we do not value a system more than the other, and we, on one end, and on the other hand, we will never introduce any provision which will oblige a member state to change their system. I said it publicly, but this doesn't count because I say many things publicly and not. But what is much more important is that it's written. It's written in our green paper already, and it's written again, I think, in some official documents which represent, in the action plan. In the action plan is probably confirmed. So, but in any event, the answer in substance is, as I said, we do respect different systems. We do not value one system more than the other, and we will never ever oblige member states to modify their culture. This is again one of the points, one of the aspects where the famous balance I was talking about, this time between national level and EU level, should be achieved and respected.
Yeah, the last one.
Exceptionally.
Sorry. Yeah.
Thank you very much. Ministry of Justice, Luxembourg. I think at the last conference in Dublin, you talked about this single-member company as a future initiative. Could we maybe have more information on that? Thank you.
I'm asking, of course, my colleague. Can we give more information? Okay, we can give. No, I mean it's an open chantier. It's not again. It's not something that we have finalized. We are studying the possible impact. So we are producing what is called, in the European jargon, the impact assessment of this proposal, and your neighbor knows what we are talking about. And we are now checking whether it is the cost-benefit analysis of the proposal encourages us to go forward. We believe that since we did not manage to go through with the proposal for the private company statute, and although we thought that, we think that it is a real pity not to have the benefits that this proposal would have had in terms of facilitating cross-border activities of companies. Since this was not possible, we have to try to identify alternative means or alternative instruments trying to offer similar benefits, although on a smaller scale. So we had the idea of envisaging a very flexible, very quick, very light tool in order to facilitate the life of single-member companies. So companies, of course, in this category, which could look like very limited at the beginning, because one could immediately think only about startups. It's not true, because we see that many big groups, for example, have single member or one shareholder companies as subsidiaries in other member states. So let's say the magnitude, the potential magnitude would be greater than one could think when referring to this definition. So what we have in mind is to create a simplification of the formalities, administrative formalities, to create the company, create, let's say, a truly efficient system of, let's say, cross-border, of recognition in other member states, a real passport, if we want to use a word which was très à la mode a few years ago, and make sure, let's say, create this feeling. It's like in my country, you know, when you do business, you do it in an atmosphere, in an environment which is reassuring as the one that you should have in your home country. Now, as I said, the details, it's a bit early to disclose details, because again we are in the process of elaborating. But the idea is precisely that one. Is to try to basically offer another instrument to facilitate the cross-border activity of small and medium-sized companies, and in some cases not only, by surrounding the problems that we had with the proposal on the company statute. Of course, this will be, and correct me, Jeroen, if I'm wrong, a 114-based instrument. So is that so? It's going to be an internal market instrument. So in that particular case, by coincidence, we will not need unanimity. So this is going to be pretty important in terms of final result. Corporate governance is really at the heart of the policy of the European Commission, and I'm very happy to be here to talk about it, because as I said in my keynote speech, it is really one of the top priority for Commissioner Barnier and for this Commission. And I am really grateful to the Baltic Institute for Corporate Governance for having put together this very high-level event. Occasions like this one are really important in order to progress together in a common path towards a more sustainable economy for the Union.